Welcome to the deep dive. We cut through the noise to give you the essentials on really foundational crypto projects. And today, we're zeroing in on Flare Network. It's a layer 1, an EVM L1 actually, built pretty much from the ground up to tackle this huge data problem in blockchain.
Right. I mean, that's the fundamental challenge, isn't it? How do you get reliable, real-world data, asset info from outside onto a blockchain securely without trusting some single point of failure?
Exactly. And Flare's approach is, well, it's different. They've basically built these data protocols right into the core network layer. Enshrined, I think, is the term they use.
That's the word. And that's the core of it, really. Their whole mission is about connecting things, assets that were stuck, external data feeds, connecting it all to DeFi, but in a way you don't have to blindly trust. So our goal today is to give you that shortcut, that solid understanding of Flare's architecture. We'll hit the main pillars. The FLR token itself, those two data protocols, the FTSO and the FDC, and then the FAssets system, especially with the recent FXRP launch.
Okay, and just so you know where we're coming from, our insights today are pulled from Flare's developer hub, bits of their white papers, and news articles covering the launches. Right, let's get into it. Let's unpack this architecture, starting with the heart of the network, the native token, FLR.
Okay.
So FLR, it's got like 4 key jobs, right? Really crucial for how the network actually runs. First, there's network security. That's standard proof of stake, staking FLR to validators.
Yep, pretty standard L1 stuff there.
Then second, it's the incentive for providing data. You delegate your FLR voting power to the Flare Time Series Oracle, the FTSO we mentioned, get rewarded for helping secure data feeds.
Crucial part, that delegation. We'll definitely circle back to how that works.
Third is governance. Holding FLR lets you vote on Flare improvement proposals, the FIPS.
Yeah.
So you get a say in the network's direction. And finally, transaction fees. You need FLR to pay for transactions, helps prevent spam. And here's a key detail. All those fees, they get burned, completely removed from supply.
Right. Burned, not recycled. That's important for the tokenomics. And speaking of tokenomics, the supply story itself is pretty interesting. So Genesis was back in July 2022. Token distribution event, the TDE, was January 2023. Initially, they minted, get this, 100 billion FLR.
Wow, 100 billion, that's a lot.
It was a lot. But then almost immediately, FIP.01 came along and slashed that initial supply way down to just 15 billion FLR.
15 from 100. That's a massive cut. Why such a drastic change right at the start?
It seems like a really strong signal, prioritizing value, scarcity, and getting control into the community's hands quickly, rather than just flooding the market.
Yeah, that definitely sends a message. And you see that community focus elsewhere too, right? The sources say over half the tokens, initially 58.3%, are meant for the community.
Exactly. And that percentage is actually climbing. There's this ongoing monthly burn of tokens allocated to backers. 66.29 million FLR burned every single month.
66 million a month. Wow.
Yeah, running from October 2024 through January 2026. So by the end of that, the community's share creeps up closer to 60%, almost 59.6% to be precise.
Okay, so clear focus on community ownership. What about governance, though? Who actually gets to vote with all this FLR?
This is where it gets really interesting, I think. So about 80.2% of the distributed tokens can vote.
Yeah.
But the Flare Foundation and their VC fund, Flare VC, together, they hold almost 20%, 19.8%. They are explicitly banned from voting in governance.
Wait, they ban themselves. The core entities can't vote with their own significant holdings.
Correct. They've technically restricted their own influence right in the protocol.
Yeah.
The tokens are basically locked out of the voting process. It's a deliberate move towards decentralization.
That is quite something. It prevents those core teams from just dominating every decision. How exactly do they enforce that? Technically.
From what I understand in the docs, those specific tokens held by the foundation and the VC fund are assigned to, special addresses or pools that are just flagged as non-voting within the system's logic. So it's baked in.
Okay, got it. Baked in restrictions. What about inflation? Is there ongoing issuance?
Yep, there's a planned inflation schedule. Started at 10% for the first year, drops to 7% for year 2, and then it levels off at 5% per year indefinitely after that.
And that inflation primarily goes towards
rewarding those data providers, the FTSO participants.
Yeah.
It ensures there's always an incentive to keep providing that crucial price data securely.
Right. Keeps the data engine running. Okay, one last bit on the token before we move to the data side. WFLR. Why the wrapper?
WFLR, wrapped FLR. It's essential because Flare's underlying consensus layer isn't directly compatible with the EVM for certain things. So if you want to delegate your FLR to an FTSO provider or interact with DeFi smart contracts on Flare, you first need to wrap your FLR into WFLR. Think of it as the bridge that makes your FLR programmable and usable within the Flare ecosystem.
Okay, so FLR is the base asset. WFLR is the functional version for delegation and DeFi.
Got it. So we've got the token, the economic engine. But as we said, Flare's real differentiator is how it handles data, these enshrined protocols. Let's dig into those. They inherit the full security of the network, right?
Exactly. That's the key. They aren't just apps built on Flare. They're part of Flare's core security model. The first one is the FTSO, the Flare Time Series Oracle.
The price feed one.
Right. Its whole job is generating accurate, decentralized price estimates for off-chain assets. BTC price, XRP price, stuff DeFi protocols absolutely need. And the way it works is pretty clever. It uses a commit reveal scheme. Data providers submit their price estimate secretly, then everyone reveals at once.
Prevents front-running or copying others.
Precisely. Then the system calculates a weighted median price, weighted by the delegated vote power behind each provider. And here's the kicker. Rewards are only paid out to providers whose submitted price falls within the interquartile range, basically, the middle 50% of all submissions. So if you submit a crazy outlier price, way high or way low,
you get nothing. Worse, you waste your gas fees. It strongly incentivizes honesty and accuracy because being an outlier costs you money. The system mathematically pushes everyone towards the true consensus price.
That's neat, very game theory driven. But you mentioned delegation is key. How does that work for a regular user?
So as an FLR holder, you don't run the data providing infrastructure yourself, usually. You delegate your WFLR's voting power to one or more independent data providers. They do the technical work, submit the prices, and if they earn rewards, they take a small fee and pass the rest on to you, their delegator.
Okay, so I lock up my WFLR to backup provider. How often does this cycle happen?
The whole delegation and reward process runs in epochs. There are 2 epochs per week, roughly 3.5 days each. They start Monday at 7 a.m. UTC and Thursday at 7 p.m. UTC. So you set your delegation, it gets locked in for that epoch, rewards are calculated, and then you can claim them.
3.5 day cycles. Got it. Now, critical question. What if the FTSO system itself gets attacked or manipulated, like a flash loan attack trying to skew the median price drastically? Is there a safety net?
Good question. Yes, there's a backstop mechanism. The sources mention that if the FTSO calculates a price that deviates by more than, I think it was 15% from the previous epoch's accepted price.
A sudden huge jump or drop.
Exactly. If that happens, the FTSO output is temporarily overridden. Instead, it uses a price provided by a pre-approved, trusted set of providers. Initially, the Flare Foundation chose these backup providers. It acts as a circuit breaker against extreme, sudden volatility or potential manipulation attempts.
Okay, so a failsafe for black swan events. That makes sense. All right, that's the FTSO for continuous price data. What about the second protocol, the FDC Flare Data Connector, sometimes called the State Connector?
Right. The FDC handles a different kind of data. It's about bringing verified information about events happening on other blockchains or even data from standard web APIs securely onto Flare.
So not just prices, but confirmations, like did something actually happen?
Precisely. Did a specific transaction occur on Bitcoin? Did an API report a certain outcome for, say, a sports match? The FTC's job is to provide a decentralized, verifiable answer to those kinds of yes-no questions about external states. And it's supported by, I believe, around 100 independent data providers running the necessary software.
How do they reach consensus on external events? Is it similar to the FTSO?
It uses a different protocol called Request Commit Reveal, or RCR. It also runs in rounds, about 4.5 minutes each. Providers again commit their observation of the external event first, then reveal. This RCR process, combined with a branching protocol for consensus, allows the network to securely attest to whether a specific requested event occurred or not.
Okay, RCR again, to prevent gaming the system. And the use case here is verifying things needed for smart contracts.
Exactly. The core use case is proving that a required action took place somewhere else. Like, imagine a cross-chain swap. The FDC could verify that tokens were locked on chain A before releasing tokens on Flare, chain B. Or, like the example in the source, settling a prediction market on Flare based on the official Olympics results fetched via an API verified by the FTC.
Okay, I see. FTSO for continuous values like price, FDC for discrete events or states elsewhere. Powerful combination.
Very. And when you put them together,
you get the foundation for FAssets. This seems to be the flagship application built on top of these data protocols.
It really is. The goal of FAssets is huge. allow tokens from blockchains without smart contract capabilities. The big ones mentioned are XRP, Bitcoin, and Dogecoin to be used productively within DeFi on Flare.
Bringing that massive, often idle capital into the world of smart contracts, how does it actually work? Is it just wrapping?
It's more sophisticated than simple wrapping, mainly because of the security model. It's designed to be non-custodial. You as the user wanting to bring, say, XRP onto Flare as FXRP, interact with what are called agents.
Agents. Who are they?
Agents are participants who lock up a significant amount of FLR tokens as collateral. They are the ones who actually custody the underlying asset, like the real XRP on the XRP ledger, on behalf of the user.
Ah, so they hold the original asset and they have to put up FLR as a bond.
Exactly. And crucially, they need to maintain over-collateralization. The value of their locked FLR must significantly exceed the value of the XRP or BTC, etc. they are custodying. The FTSO provides the real-time price feeds needed to monitor this collateral ratio constantly. If an agent's collateral drops too low, they risk getting liquidated, and the user who minted the asset is made whole from the agent's FLR collateral.
So the user's risk is minimized because the agent has more skin in the game, backed by real-time FTSO prices. That's clever.
It's a core mechanism making a trust minimize, rather than purely trust-based like many centralized bridges.
And the first major rollout of this system was FXRP. How does that launch go?
It was pretty impactful, actually. FXRP is that one-to-one representation of XRP on Flare. The sources highlighted a really striking metric. Within just hours of the FXRP system going live back in September 2025, over $7.1 million worth of XRP was deposited and minted as FXRP on Flare.
$7 million in hours. Okay, that definitely shows some serious pent-up demand from XRP holders looking for DeFi utility.
Absolutely. People want to do things with their assets like lending, borrowing, providing liquidity. FXRP unlocks that on Flare non-custodially.
And were there incentives to encourage this early adoption? Often launches come with high yields.
Oh yes, definitely incentives involved, primarily yield farming opportunities. The reports mentioned high APRs being targeted, sometimes up to 50%, especially for providing liquidity for FXRP pairs on Flare native decentralized exchanges. These rewards are often paid out in RFLR tokens, which are reward versions of FLR.
50% is attractive, no doubt, but it also raises the usual DeFi questions, right?
Exactly. This brings up a crucial point for anyone using these systems. While Flare itself has these built-in safety mechanisms, the FTSO, the FDC, the over-collateralized agents for FAssets using DeFi apps built on top of Flare still carries its own risks.
Smart contract bugs in the specific lending protocol or economic risks related to the yield strategy itself.
Precisely. So even with strong Layer 1 security, you always need to do your own research. Understand the specific application you're interacting with, and assess the trade-offs. High yield often correlates with higher risk, regardless of the underlying chain.
Sound advice, always. Okay, so FAssets are live, FXRP is gaining traction. For our listener, the learner who wants to get involved directly, maybe not as an agent, but just by participating, you mentioned delegating to the FTSO earlier. Let's give them the actionable steps.
Right. Maximizing your participation and potential rewards often starts with FTSO delegation. It's generally pretty straightforward across different wallets that support Flare.
Okay, what's step one?
Step one is wrapping. You need to wrap your native FLR into WFLR. Crucially, though, you need to leave a little bit of FLR unwrapped, just a small amount, because you'll need that native FLR later to pay the transaction fees when you claim your reward.
Good tip. Keep some gas money aside. Okay, wrapped FLR, then what?
Step two, choose your data provider or providers. These are the independent entities running the FTSO software. Wallets usually show a list.
How many should you pick?
The common recommendation is to delegate to 2 different providers. This helps average out performance. Maybe one has a slightly better reward rate, one epoch, the other does the next. It also mitigates risk if one provider temporarily goes offline or underperforms. You can split your delegation percentage between them.
Okay, so wrap FLR to WFLR. Choose one or ideally 2 providers. Step 3.
Step 3 is just confirming the delegation transaction in your wallet, sign it, pay the small FLR gas fee, and you're set for the upcoming epochs.
Simple enough, but choosing which provider? That seems critical for actually maximizing rewards. What should people look for?
Absolutely critical. There are 2 key metrics you must track when picking a provider. The first is their vote power cap.
Cap, meaning there's a limit to how much delegation they can effectively use.
Exactly. Providers need a minimum amount of delegated vote power to even be eligible for rewards. But they also have a maximum cap. On Songbird, Flare's canary network, it was mentioned as 2.5% of the total vote power, for example. The exact cap might vary on Flare mainnet. The crucial thing is, if a provider is already at or over their cap, delegating more WFLR to them actually dilutes the rewards for everyone delegating to that provider, including yourself.
So chasing the biggest, most popular provider might actually hurt your returns if they're oversubscribed.
Precisely. You want to find providers who are performing well but still have room below their vote power cap. This ensures your delegation contributes effectively to rewards.
Okay, check the cap. Avoid oversubscribed providers. What's the second metric?
The second key metric is the reward rate. This is usually displayed by wallets or community dashboards. It tells you, quite simply, how many FLR rewards that provider has been generating recently per, say, 100 WFLR delegated per epoch.
So that's the direct measure of their performance?
Right. It reflects their accuracy, their uptime, and the fees they charge. You want a provider with a consistently high reward rate, who also has capacity under the vote power cap. Monitoring those two things is essential for maximizing your FTSO rewards.
Got it. And just a historical note from the sources regarding the very start. Rewards didn't actually begin immediately at the TDE, did they?
No, that's right. The rewards for the very first 2 epochs after the distribution event were burned, and claimable rewards actually started accumulating from epoch number 3 onwards. So people needed to have their delegation set up before January 13th, 2023 to be locked in for that first reward-paying epoch.
Okay, good context. So bringing this all together.
Yeah, the big picture takeaway here is that Flare isn't just another EVM chain competing on speed or fees alone. It's really building this whole integrated ecosystem focused squarely on solving the data problem. Securely bringing off-chain data via the FTSO, verifying external states with the FTC, and then using that foundation to unlock previously isolated capital like XRP through FAssets, connecting it all to DeFi. That seems to be the core thesis.
They're building the secure data pipelines into the blockchain itself.
That's a good way to put it. A foundational layer for decentralized data, powering new kinds of applications.
Okay, so let's leave our listeners with something to chew on. A final provocative thought building on all this. If Flare's State Connector, the FDC, can genuinely provide decentralized, verifiable proof of events happening on any external blockchain, proving a transaction finalized on Bitcoin, or confirming assets are locked in a specific Ethereum contract, how might that fundamentally change the need for centralized, often risky, bridges between chains? If you can prove what happened elsewhere trustlessly, could that enable much safer, more seamless cross-chain interactions directly at the smart contract level?
Interesting. Like building contracts that react directly to verified states on other chains without a bridge middleman.
Exactly. And what entirely new kinds of applications become possible then? Especially thinking ahead, the sources mention verifiable compute using things like trusted execution environments, Ts being in development for the FDC too. Imagine verifying not just state, but complex computations happen correctly off-chain. What does that unlock?
Yeah, that opens up a whole new design space. Lots to think about there.
Definitely. All right, that's our deep dive into Flare Network's architecture for today. Thanks for tuning in. We'll catch you on the next deep dive.